I'm seeing this percolate right now. It's a reaffirmation. We have to go to Asia. What have you learned in the years of getting off the plane at Hong Kong, getting off the plane in Kuala Lumpur? There's this mystery. We've got to go to Asia.
Well, remember, 60% of the world's population is in Asia, and the largest part of the economic growth over the last 10 years in the world has really been in Asia. So if you're not in Asia, you're really not in the investment world. So China is a country where we are a large investor. A lot of other private equity firms are as well. And I think China will continue to grow at 6.5% or more for quite some time. One of the most important stories is that not everything is China. India is growing at over 7%, and Japan is coming back from virtually no growth at all. Japan is still the third largest economy in the world, and Southeast Asia is growing. So if you're really going to be in the business investment world, you need to be in Asia.
McKinsey's done great work on these evolutions. I think of Jagdish Bhagwati, Columbia as well, talking about the new growthiness and the new rule of law within India. Do you see India in the next 10 years getting to a better place because of a better business and finance rigor?
Western investors used to think that India was an interesting and easy place to invest because people spoke English there, but in fact, it was much harder to invest there than China. Today, it's much easier. Modi has done a spectacular job of inviting Western investors in. It's a very, very attractive environment right now.
And they did bring along the rule of law that existed because of the British influence, which I think is terribly important and people tend to forget about.
Yeah, David, do you worry, though, about emerging markets overall? They have so much debt denominated in dollars that if there's a surprise with, the Fed hikes, or if the dollar goes much higher from here, a lot of these countries will have devastating problems.
There is a concern if the dollar gets too high, the enormous amount of emerging market corporate debt, which is dollar denominated, but where the local currency is really relevant because that's where the earnings are, that these debt numbers cannot be met. In other words, the debt can't be paid off because the dollar is just too highly valued and the debt has to be paid back in dollars. That is a real concern if the dollar gets too high. It's too early to know if it's going to be a problem, but if there was a potential cause of a slowdown in the global economy, I think that is one of the potential causes.
Yeah. How do you read China?
China is a country where, in my view, it's the single best place in the world to invest other than the United States. The United States is in a league by itself because of the rule of law, transparency, and so forth. But the 1.4 billion people, enormous numbers of consumers, 6.5% growth rate, and the country is very capitalistic. They know more about my business in China than I think sometimes I do. They know exactly what private equity is about. They welcome private equity. It's a country where I think any serious investor wants to have some money.